Yo, what's up you guys? Welcome back to a new video, and in today's video we are going to do a usual weekly market breakdown because there's some crazy stuff that has currently gone and that has been happening in the market that we are going to discuss based off a fundamental perspective. If you're new here, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you do enjoy the content, do consider smashing that thumbs up button there as well. Don't forget about the competition that's ending on Tuesday, and winners will be made public on Wednesday. Very easy. Comment to friends, share the post, make sure that you sub to the channel there as well. Now let's get started with some of the news events that's taking place. Tuesday we've got the consumer confidence, and then we've got the PMI and the ISM PMI services. Now you might be thinking, okay, but where is the NFP? Now basically what we know is that the Bureau of Labor Statistics, basically they released the NFP data on the fourth Friday following the week containing the 12th of a given month. Now in March, the case will be the 10th of the month. So because February the 10th also fell on a Friday, that only leaves 3 Fridays in between, which is evidently not enough time for them to prepare the report. So instead it falls on March the 10th. So what that basically tells us is that we can expect the NFP, as we can see here, the data is only coming through on Friday the 10th of March. However, it is still very early to determine what the consensus are, but so far we know that the Dow Jones expectations is for the Feds, or for the data, to have added at least 195,000 jobs, but we cannot speak there because we must still get there. Now that we got that out of the way, right, so we know all of that stuff is happening, we have got some crazy news coming on. Okay, firstly, it says here the next bull market in stocks won't kick off until the Feds is forced to bail out the US government, Bank of America says. Now I'm going to explain this to you in layman's terms. If you are new here, like I said, a sub would be appreciated, but if you are new here, the prices of the dollar index is solely driven through interest rates, which is driven through inflation controls interest rates. If inflation goes up, interest rate goes up, because interest rates are used to cool down inflation. If inflation goes down, the Feds then have movement for the interest rates to drop. Now, when interest rate increases, that strengthens the currency pair that you're looking at. In this case, it is the dollar index. So as the Feds continuously hike interest rates, they make the dollar stronger and more investable for investors. But if the inflation comes down, then that means interest rate will either be reduced or it will be increased slightly less than what it was before. Why is this happening? So inflation basically helps, the only tool that the Feds have to cool down inflation is interest rates. Now, interest rates helps the Feds basically reduce consumer spendings. How? By increasing interest rates, they're basically adding to consumer debt. That means consumers have less money to spend. Therefore, the consumer spending index, which measures what consumers spend, will decrease because consumers doesn't have enough money to go out there and spend. How does that work? Basically, what happens then is that because the companies listed on your favorite account blowing NASDAQ 100 is a composite made up of a lot of these companies such as Apple, Amazon, all of these good tech companies that makes makes profit through consumer spending. Now consumers are not spending as much. As a result of that, these companies don't make as much money, and because of that, the stock market would drop in value. But because the demand for the dollar index will increase due to the higher return that investors will get based off the higher interest rate. Now, the only way for all of this to stop, it's now confirmed that the stock market is well on its way to continue the bearish momentum that it picked up. Looked like it was going bullish when everyone said, let's buy the dip and buy a ticket to Dubai after that as well. But now we can slowly see that the buy the dip is not as over yet. I'm just going to read the bullet points. It says here, the next bull market in stocks won't happen until the Fed's reserves cut interest rates to bail out the US government, according to the Bank of America. Now, the Feds cannot cut interest rates as of yet. Why? Because just when we thought that inflation was starting to cool down, the report that we received most recently gave us another indication that the CPI was again on the rise. So as soon as we see there's a continuation of inflation or CPI data continue to decline, only then can the Feds then make that decision to say, you know what, we're going to cut interest rates. Now, this will then boost the stock or the indices sector there as well. It says here, the BOFA said that the rates will result, or the Bank of America said that the high rates will result in staggering increase on interest payments of America. Again, it's exactly what I said now, because as you add interest rates to people's, to the consumer spendings, you basically put people in more debt, meaning that they have less money to spend on companies that are listed on the stock exchange. Since the Bank of US government's debt is expected to increase by more than 21 trillion over the next 10 years. Okay, thank you. Next up, which says, Elon Musk weighs on the Fed's monetary policy again. A bad Fed decision affects the lives of everyone. We're not really sure how that affects the lives of, we know it affects the lives of everyone, but it's a blanket statement to make, because he's basically pointing fingers at Tesla, and because Tesla's on the list there as well. It says here, Elon Musk weighed on the Fed in a reminder of what his policy could crush the stock value. Like I've explained now, increase in interest rate hurts consumer pockets, do not be able to spend as much on the stock market. That then means that these prices, the prices of the stock market or the prices of these companies, they then tend to drop in the value. It says, a bad Fed decision affects the life of everyone, he tweeted in a discussion about the Fed. Next Fed vice chair, it says the tech CEO has blamed the aggressive interest rate hike for that. Thank you. Now, you guys can see now, these are the kind of things that I've been speaking about year over year, right? Every time I say this. Now, Elon Musk comes out, he said it, and they put it on inside. Like, why didn't they put my YouTube video on here as well? Because I've been saying this for the past couple of years, already, but nobody's like, people's like, how do you know it's going to happen? These are the fundamental confluences that you want to look at in order to determine the next move in the stock market there as well. Now, we've got Elon Musk coming through, we've got the Bank of America coming through, and then last but not least, this last article over here says that the Fed's own economists are ringing recession alarm. Now, it says here the Fed's reserve staff has rang the alarm on a potential recession this year. They called out heady valuations of stocks and real estate, raising the prospect of sharper declines. Again, more evidence pointing that the stock market decline is not over. It says here the elevated inflation could persist into next year, the central bank economists cautioned. Now, if you had to sum this all up and you had to explain it to a 5-year-old, you'd basically tell him that things are going to get bad for the stock market now because of the negative correlation between precious metals, indices, and any currency trades who trades on the spot. We obviously know trades against the dollar index. We can expect the dollar index to increase in value, the stock market to decrease, and then precious metals to decrease there as well. Now, let's jump straight into the rest of the information, right? So now that we know we're expecting a bullish outlook on the dollar index and a bearish outlook on anything else that's trading against it, we are going to look at some price action development that we could potentially see going into next week. Now, the most recent one that we saw over here was the dollar index had broken out of a very long consolidation phase, right? Now, we also know price action teaches us that we have two levels in the market. This is resistance, that is support, and when resistance gets broken, it becomes support, and when support gets broken, it becomes resistance. Now that we've got resistance broken, it tells us that the market basically came back and testing it as support. Now, in the market, you get something called an impulse, which is the leg, and then you get a correction, is where the market pulls back. For investors, they call that profit taking. Now, when you see a market pull back, that's normally when the investors go, okay, we're happy enough to take our profits here, and then you see a price decline. Then they take their profits that they made and they buy it at a lower price. Now, we can see here that the market's back to buy it at this equal low, and that is the beauty of technical analysis. It's technical analysis. The market always, you might always think that how does the market always reach a certain price before high impact news, and that is how this whole thing has been orchestrated. Before high impact news, the market always sits at a very good level where it needs to bounce off, and then the news just comes out all of a sudden is good news because the market gets support. But in any case, let's continue. Now we can see that the dollar index clearly has clearance to the upside to this previous level of resistance that it created here in September of 2022. Now the market is clearly trading in bullish price action or in bullish territory. Firstly, if you look left over here, you can see that this was a very strong level in the market. Now this level over here acted as a level of support, then resistance. The market then broke above resistance, and like I said, this level of resistance is now acting as support. A pullback is expected. By doing that, the market would also print an inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. Next up on the daily time frame, what do we have here? Now from a daily perspective, it's very clear that the market has just reached a strong level of resistance. Now remember that when the market reaches resistance, there's always the possibility of the market going for that liquidity grab, and on higher time frames it looks like a liquidity grab, but if you go on to the 4-hour time frame, you'll notice it's basically the actual high of where the wick is identified from a higher time frame. So for instance, if you go on the daily, you'll see that's the end of the week. Now going into next week, I do expect a correction to take place on the dollar index. I just need to find my, I guess it's again me. So I do expect the market to continue slightly higher, then pull back there, and then from there we are going to get that next continuation, but I'm also going to keep you guys updated on that here as well. As we can see here, once again the resistance got broken and it's going to come back to test it as support before we see the market rally and that continuation. Now the worst thing about all of this is that if you're from South Africa, this doesn't look good for us here as well, because it's just bad. Now I'm not going to go through all of the time frames. Now you're on the Nasdaq 100. Now the Nasdaq over here is also now currently sitting at this but very strong structural level. This level over here acted as a, no, that's not what I was looking for. Let's go back there. So this market over here tested, printed a new level of resistance, broke above that, came to test it as support, and is back to test it as support once again over here. What I would like to see is the price action that we have on the weekly time frame. Yeah, exactly. Now I would potentially want to see, even if it's just a liquidity wipe to the upside, I would potentially love to see the market come back to this level again once again, because remember, markets normally go into a consolidation phase before high impact data is being released. Going to next week, I definitely do expect the stock market to correct itself. And when I say the stock market to correct itself, I don't want you to go out there and say now I do just a slightly lower. There we go. So I do expect the market to go maybe open with a gap to the downside and then continue that move up. So when I do say, we expect the market to continue bearish, a lot of people think that I'm saying that the market's just going to go boom. No, the market does move in waves, and that is where patience come into the market, where you have to basically sit on your hands and wait for that next move over there. Yeah, we've got a similar level over here, and acted as a level of support. I do expect some further continuation to the downside for the Dow Jones, a nice liquidity grab maybe to the downside before getting a potential correction. And the reason why I say that is due to the negative correlation between the dollar index as well as the stock market. Because we expect the dollar index to slightly continue higher, we then we have to expect the stock market to continue lower. We've got gold over here. Gold has been stuck at this also a very strong structural level that it finally managed to break below. Again, you can see the price action is very, very similar across the board. The same situation with gold due to the negative correlation between gold. So between gold being a precious metal, and because this numbers that you see over there is basically dollars, so per ounce. So this 1 ounce of gold at the moment is $1,810. Okay, now because gold is priced in dollars, there is a negative correlation. If the prices of the dollar increase, then the price of gold decreases. So I'm not sure if most of you remember back in the days where you only had to post to get some amount of gold reserves there as well. Okay, next up we do have AUD USD. This one I would potentially, I won't, I'll call it because this is also very strong structure that the market had printed over there. However, I do expect something similar to that, potentially a liquidity wick to the downside, and then that correction to take place at that previous level of this level over here that the market had printed also there. Once again, next up we've got Euro USD. Now if you can't see it, then you'll probably never see it. This is the level that I do anticipate Euro USD to go and test next week, and then from there you can see where this level is allocated. We could potentially see, I'm just going to do that just not to confuse anybody, but that is where I see the market continue going into next week. If we do get another green candle being printed, then by all means that could be the structural level that we can expect Euro USD to go and visit as a potential sign of correction before a continuation to the downside. Other than that, the best thing you can do is to sit on your hands, wait for the market to provide you a good opportunity. That is all from my side. And if you're wondering why is this guy recording this video at this time of the morning, well, it's because of load shedding. I wanted to do it yesterday, but then we had load shedding for like 4 hours, couldn't do it. So I woke up early and I had to record it now because I've got another load shedding coming up once again. Okay, we're all touched by it. Guys, that is it from my side. If you enjoyed the video, like I said, do consider hitting the thumbs up button. I just want to say thank you for your time. Thank you for the support. And as always, cheers for years.